Welcome. In this video, Onyxcoin is preparing for a big attack. We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. Among the technical analysis tools frequently used by investors and meticulously evaluated by both traditional and modern market participants, Fibonacci retracement levels are currently providing notable signals in the present chart structure. Especially during pullbacks following an upward movement from a low point, Fibonacci retracement levels are crucial for identifying potential support areas and reversal zones. In particular, the 0,618 and 0,786 levels are widely regarded by many analysts and investors as the golden ratios, with a common belief that the price has a strong potential to react positively upon reaching these areas. The Fibonacci tool drawn from the low to the high on the chart currently indicates that the price is approaching a potential reversal zone, presenting a promising technical outlook. Reaching the 0,618 level, or the deeper 0,786 level, is often seen as an area where major buying opportunities arise and the market prepares for a potential directional shift. These levels are critical thresholds recognized by both individual investors and institutional algorithmic systems, as reaching them offers a strong technical indication of a potential upward reaction. The 0,618 level in particular, often referred to as the golden ratio, serves as a cornerstone in technical analysis. Found inherently in the Fibonacci sequence, this ratio appears frequently not only in nature but also in financial markets. Therefore, when the price reaches the 0,618 level, it often catches the attention of major buyers. Investors generally interpret this level as the starting point of a new upward trend. From a technical perspective, this zone typically acts as a strong support, and upward reactions become almost inevitable when the price touches it. Similarly, the 0,786 level is a highly strategic point for investors who favor deeper corrections and expect the price to gather strength from a lower base before climbing more robustly. This level has historically served as the site of numerous successful reversals, making it a reliable turnaround point for many. When the price nears this area, buying interest in the market often increases, pushing the price upward again. As such, the 0,786 zone holds the potential to ignite a significant upward movement. The effectiveness of Fibonacci levels aligns closely with market psychology. Many investors may not know exactly how far a price will fall or when it will reverse, but they feel more secure relying on these mathematically derived indicators. This sense of confidence triggers buying behavior, contributing to upward momentum in the market. The price currently approaching such key ratio-based levels creates a positive psychological atmosphere for investors. As expectations turn bullish, this sentiment reflects on the price, creating a positive feedback loop. Additionally, Fibonacci retracement levels are not only referenced in the spot market, but are also used in futures, options, and algorithmic trading. This widespread usage further enhances their effectiveness. As the price approaches these levels, not only manual investors but also automated trading systems may activate, supporting the market in the buying direction. This support provides the foundation needed for prices to begin rising in a strong and steady manner. But of course, we can't base our decisions solely on Fibonacci analysis. Let's take a look at other metrics as well. Stay tuned. Upon careful examination of the chart, it is clearly evident that the price movements are forming a well-defined and classic technical pattern known as the inverse head and shoulders. This formation is considered one of the most reliable reversal patterns in technical analysis and is particularly viewed as a strong signal that a downtrend has come to an end and a new uptrend is about to begin. The current price action shows that this formation is developing in a very systematic and natural manner, indicating that the market may be on the verge of a positive shift. The inverse head and shoulders pattern generally consists of three main components. First, the left shoulder, followed by the head in the center, and finally the right shoulder. Once all three components are completed, the formation becomes technically active, and when the neckline is broken to the upside, it generates a strong buy signal for investors. The chart is currently pointing to one of the final stages of this process, the completion of the right shoulder. The price has begun to make the necessary movements to form this right shoulder, suggesting that a potential breakout could occur in the near future. If this breakout happens, price action could accelerate upward, potentially marking the beginning of a new bullish wave in the market. The head of the formation usually represents the lowest price point and signifies the end of the downtrend, where buyers start to gain control of the market. The shoulders on either side of the head form at higher lows, signaling that the downward pressure is weakening and an upward structure is beginning to take shape. In the current situation, the price's effort to form the right shoulder indicates that the market is entering a recovery phase and investor confidence is starting to return. This leads to the emergence of positive expectations and optimistic scenarios. In technical analysis literature, the target level of an inverse head and shoulders pattern is typically calculated by projecting the distance between the head and the neckline upward from the point of breakout. Therefore, it is technically possible to see an upward movement equal in depth to the head. In the current chart, if this pattern becomes active, a significant price increase could be anticipated, especially if the formation is completed properly and the neckline is broken with strong volume. It could signal the start of a powerful uptrend. The formation of this pattern provides not only technical confirmation, but also positive signals in terms of market psychology. Such reversal patterns indicate that investors are shifting their expectations from bearish to bullish and are adjusting their positions accordingly. This shift can lead to an increase in buying activity, a disruption of the supply-demand balance to the upside, and a natural rise in price. The current chart setup appears to be a clear indicator of such a scenario. Additionally, a review of the volume profile during the formation process reveals some noteworthy positive data. Typically, an increase in volume is observed during the formation of the right shoulder, which indicates growing buying interest and confirms that investors are adopting a bullish outlook. Formations supported by volume are always healthier, and the probability of the price reaching the target level after the breakout is significantly higher. In the current case, if the right shoulder is completed and the neckline is broken with strong volume, the price is highly likely to reach the technical target. It's also important to note that the inverse head and shoulders pattern is closely monitored not only in spot markets, but also in futures trading and by large capital investment funds in their technical analyses. The successful completion of such patterns often indicates the entry of major players into the market and a clear trend reversal. The MACD indicator is a widely used and reliable technical analysis tool for identifying momentum and trend changes in the markets. One of the most notable developments currently visible on the chart is that the MACD lines are positioned above the zero level. This is a significant indication that the current market conditions are progressing in a positive direction. In particular, the fact that the MACD lines continue to stay above the zero level suggests that the market is still in an uptrend and that strong momentum is being sustained. This points to a very promising technical outlook. The zero line is a critical threshold in MACD analysis because it represents the position of the short-term average relative to the long-term average. When the MACD line, along with the signal line, remains above the zero line, it generally indicates that the market is maintaining its upward momentum. At present, both the MACD and signal lines remaining above the zero level creates a strong technical structure that supports upward price movement. This positioning shows that buyers are still active in the market, and that selling pressure has not yet made a significant return. Recently, the MACD line has been moving upward and appears to be preparing for another bullish crossover with the signal line. This potential crossover is typically interpreted as a strong buy signal in technical analysis. A bullish crossover, where the MACD line crosses above the signal line, indicates an increasing likelihood that the market will regain momentum and move higher. We will be monitoring this crossover closely to see what unfolds. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.